500 on the daily chart, and one of the things that we're looking at last time is that the time of this particular correction through here is still quite young as a wave 4 compared to the wave 2 that we were considering through here. So I haven't counted this, but I can just see that it's in about 40 odd days there, and this one here is not in 40 days. So normally the wave 4 would be longer in terms of time, so it's still quite sort of new here. So look, we're essentially, when your wave 4s can get quite complicated, they can be triangles and double zigzags and a whole lot of things. It's sort of rarely that we get them simple in terms of a zigzag and ABC correction. So look, it's going to be a bit of a guessing game what really unfolds across here. First of all, we know that it's corrective, so that's fine. But how it's going to correct is another thing. So this particular move up through here, we were looking for 5 waves up through here for the A, B, and C here. If we just look at this on a smaller chart here, we were looking for this as being an A wave, a B wave, and a C wave to here for the larger B wave here. But this is not a very clear 5-wave structure up through here. We'd expect selling to come in at the 1650 as it did. The G8 meeting came out in the last couple of hours saying that the things are looking a little bit weaker than expected. However, yeah, it just hasn't given us that nice sort of 5-wave structure here. It has on the Australian market, but that's a different kettle of fish, and we'll get to that in a moment. So the main point is that yes, the wave 4 can pull back to 38.2%, which is down here, and while it's under the 1650 here, it may just pop up through there, but not finding support on it. It's got that weaker bias to it until that support is coming in on the 1650 there. So look, it's just going to be a bit of a guessing game from here on in for a little while, because the wave structure is not clear. We're definitely going to get something a bit more complex than now that we've got 3 waves here. So we're definitely going to get something a bit more complex. I just don't know what it is, that's all. There's still the possibility of this being up for wave 1 here and back for wave 2 here. I'm not sort of forgetting that. If the market finds a 1620 as the retested resistance, then that would add a layer of bearishness into the direction. So that's something to look forward to at that point. Obviously support, nice support on the 1650 is going to give us like that little edge sort of higher, and we are expecting rallies in the Australian market. This is the same for the Dow Jones as well here, in the sense that in this particular case, because the market's above the 15,000 here, above the median level, we have to take a positive bias on it, but at the same time we're still mindful that we don't have a clear 5-wave structure here. It's more like in 3 waves now, because that's been sold off. But I guess if this low here gets taken out through here, then we know that we've got this as part of a complex corrective wave 4 pattern that we're still in. So look, on the upside here, of course, if the 15.3 found support, then definitely we'll be looking at wave 3 to the upside of that stage there. And you know, we in an odd little way, we do have this as, you know, we have that as 5 waves. We have this as 5 waves here. So, you know, we can have this as up for 1 and back for 2, and then up for 1 and back for 2. That's possible as long as that low there stays in place, or we could say rather, more importantly, the 15,100. As long as that stays in place, we've got hope for a positive market to unfold at that point. And the next step would be looking for 15.2 as the support there. So look, unfortunately, we just got to work through this this correction until we've got a positive outcome that we can use. When we look at I'm just going to go straight to the Australian market. Yesterday, or last time we spoke, this move off the low here for the ASX200, we were counting this up here as wave 1, back for wave 2, and we had this little 5 waves up through here. Not sure exactly where we were here, but we were looking at a wave 4 pulling back to the wave 4 of 1 lesser degree through here, and then looking for the next 5 waves up, which we've got here in terms of an ending diagonal triangle, because the first wave here is quite long. The third wave, which is normally supposed to be the longest, is, well, it can never be the shortest, that's all. So it's quite short here compared to wave 1. So that means it tells us straight away that wave 5 is going to be even shorter, if that's going to be the case. So look, what we've got here, we've got a rough looking 5 wave structure to the upside, and that means that that would be followed by an ABC correction as such. So we'd be looking for some type of, it could just be off the 48 there, which is highly likely, a 3-wave swing that could be something like this here. That would be the textbook sort of thing we'll be looking at, and then we'd see a structure further to the upside as such like that. So look, that's the way I see that. We've got to see sort of how it sort of pans out. It may not be exactly like that, but look, some important numbers here. While it's got support on 48.30, the top of Group 1, that's significant, but I'd certainly suggest to allow that to, to really play out somewhat, because Friday and Monday, if they're bullish, which they were, then the profit taking comes in on the Tuesday. But that said and done, the 48.50, the midpoint here, if that found support, then you need to trade what you see, and you would trade long off that midpoint there. Otherwise, expect to move back in here, and it's probably not worth trading, because it would just be, first of all, it would be corrective, which would be choppy price action, and also coming back into these fresh old numbers here that have offered support would only create further choppy price action at that point there. Alrighty, let's have a look at commodities. Just have a look at the daily chart for the ASX200. What we were sort of looking at through here, we're looking at this as a 5-wave structure to the downside. A little bit difficult to track here, but basically down for 1 to here, back for 2 to here, and then we had the 3rd wave down through here in 5 waves for this point here, and then we're tracking the 5th wave down, which it basically extended to the downside. In fact, each wave here was extending to the downside. So the normal thing for that to occur now is, because we've got 5 waves here, is to see a retest of the supply here at 5,000, and that's why we were looking for a little 5 waves up here, which we got. It's okay, it's reasonably there, and then we'll be looking for a counter trend here that can pull back 61.8% of that 5-wave structure there, and then we'd be looking for a 5-move structure here as such. So that's kind of how I see that, and I'm reasonably sort of happy with that, because I can see that this is the longest wave here. Even if we did take that as a wave 3 from here, right, and bring that down to there, then the retracement level would be 38.2, which we can see that the market's moved straight through that level there. So, I think, I do think we're on the right track here, but obviously in the bigger picture, we'd be looking for the 5 waves down through here. We'd be looking for 3 waves back up here. It could come higher. Normally we'd be looking at the 50, 60% retracement level, which comes in here anyway. And then we'd be looking for another move down through here as such, which can just take to the low here, or it can go further down, depending on the general sort of consensus of the market, what's happening in other markets as such as well, like the commodities. And when we're looking at the commodities here, we're looking at oil here to start with, and what we're mentioning the other day was that we've got the arrival here, we've got the reaction, the support, the first high above the level, and then we're going to see the correction unfold. The correction here, it is corrective, because I can see that we've got overlapping wave structures in here. It's just how big and ugly it's going to get as well. So also being a wave 4 as well. You can see the previous wave 4s here had kind of similar, really, aren't they? Sort of pattern recognition sort of stuff. So this would be the same, but just bigger. So all of this move here would just be the initial parts of, in here. So because this is whatever size it is. This one's bigger, isn't it? And then this one will be bigger still. So we need to allow that to unfold, but once it's complete, we'll see further upside and perhaps a retest of the 100 there. But allow that to unfold first. So we're getting for the setup. And that's the thing in using the levels. The idea is to trade to the number, wait for this classic trading levels pattern to, which is just an Elliott pattern, many ways to view, many roads to Rome, so to speak. But waiting for, recognizing what's got to occur, what's likely to occur, and then we'll get back in here, same as we'd get back in over here. Do you know what I mean? So as such, so same thing. The copper market as well, it's still, I haven't got it worked out. So, but I do know that this is impulsive here, and I do know this is corrective. It's just, it's just continuing sideways through here. So until we get a sort of a clean drop outside the levels, and the levels would be in above the 330 would be 1, 2, and 3 here. So unless we get support on top of 323, then we remain negative, and confirmation of the moving to the downside would be the 318 here being retested and having a sort of basically failing, moving down, checking it back, and then moving down from that point. So as you can see here, it's tried to find it as resistance, but couldn't do it. So you would normally take that low out here, the same as this spike here. We don't chase these normally anyway. We wait for the retest, and if the retest fails and moves down, then looking for short there. So, but the larger the correction, the further the next fall to the downside. Right, the gold market. Look, this pattern here, for instance, we got this little 5-wave structure down here, and we're looking for a wave 2 to come back. The 61.8 is at the 1400 here, but I just want to, if you take a look at this here and then have a look at silver for a moment. So just flipping over to silver. Don't quite need this intraday chart here. Just bear with me until I find the chart that I'm looking for. Okay, here it is here. So look, we've got that 5-wave structure down through here, the same as gold, and then we've got this ABC structure back up through here, and then we've got this move down through here. So silver is moving down, is sort of leading the gold. Gold's not following just yet. It may do, but the silver seems to be leading the race. So if you're trading these markets, you definitely need to be looking at silver there. In terms of trading, of course, the 1372 needs to become the retested resistance, and I'd certainly wait for that, because silver had a spike up, and gold may follow that as well before rolling over. And while it's got support above the 1372 and 1380, then it's actually got a positive bias. You need to be, well, as far as I'm concerned anyway, is that you need to be on that side of the market. But of course, we've got the 1400 here, and we've got a wave count that's suggesting lower. It's not confirmed lower, because once again, we're in a wave 4 here that can just continue to be complicated until it's done and dusted. So that's why it's important that that we understand that the 1400 is the balance line. The group 1 above, its job is to hold the price to the closest largest number. So if the 1430 became the support, then we could go long from that area pretty safely. And here, where group 2 here, if that became the resistance, then we can go short from that point there. So that's how that's unfolding. Let's have a look at FX. Okay, starting with the US dollar here, we were looking at a wave 4 here, and also a wave 4 in the euro as well, obviously in the other direction. And we were looking at these wave 4 corrections here, with the possibility of actually the euro being able to be pulled back down to 132, and the wave 4 here for the dollar to be able to move higher as well. So we knew that it was corrective, because we had this A, B, and C here, which has got overlapping wave structures. So what we didn't understand, would we have a triangle across here like we have in the euro, or would we be looking at this as this A, B, C here is just the A wave, a B wave to here, and a C wave still back up to here, which is still plausible, but this move down here appears to be that they're in 5 waves, where this is in 3 waves here. So we probably can expect further moves to the downside here, and that would leave further upside to the euro here. So we're looking at the euro in terms of a possible triangle, an A, B, C, D, and E here, and then this looks like up for 1 here and back for 2, and a little third wave starting here. But as you know, we were also looking at the 38.2 retracement level, which brings the market back down to this area through here. But now that that's popped up through there, it kind of confirms this particular triangle pattern through here. So we would be looking for a 5-wave structure to the upside in terms of 1, 2, third wave up, fourth wave and fifth wave, that type of thing there. Let's just have a little look inside of this one here as such. That's got something a bit smaller. Just bear with me a second. Okay, here we go. Right. So just on the 5-minute chart here. Yeah, look, we got this 1, 2, 3, complicated 4 here, compared to a nice simple wave 2 here, and this move through here. So we can call that up for 1. And then back for 2 here, and this has got the personality of a third wave here. You can see that it's already sort of finished here, because that's obviously the third wave in the middle here being the longest and the strongest, and this would be the 4th and the 5th in here, and this would be wave 1 here, wouldn't it? Wave 1, 2, 3, 4 and 5. So we'd be looking at, once that occurs, we'd be looking at some type of A, B and C correction that's obviously the support at the midpoint there. The 50-60% retracement level can also come into it as well. Normally a bit sort of shallower in terms of a third wave price action. So yeah, look, somewhere into probably the top of this one here would do the job there nicely. But look, anyway, either way, you need to wait for some type of correctional pattern to unfold here, and then use group 2 to go higher from that point there. The Australian dollar as well, it's pretty much unfolding the way that we expect it to unfold. The wave 4 and the 38.2 retracement level, or the wave 4 of 1 lesser degree, is still quite, still higher up through here. It is plausible that this 3-wave structure here could be the wave 4 in terms of the A, the B and the C here, and put that wave 4 there, but it would just be a little bit small in terms of wave 4. So we've been labeling it, this move here, as the A wave. Looking for the B wave to pull back 50 or 60% of the A wave here. The 95 was roughly the 50% retracement level, and we've just got that bounce up from there now. So this small bounce up from here. So I've just labelled this for the time being here as the B wave completed here, and that would be counting as the A wave here to here. Then the little A, B and C here for the B wave, and then 5 waves for the C wave through here. So that means that we should see a C wave move up through here and take these highs out here, or at least get to these highs here. But higher ground would be the go there. So in terms of looking at this further to the upside, a little bit like the euro, we can see the long strong third wave in here. So we could probably expect a little move higher into here, but once that's completed, then we'd see some type of retracement level, some sort of ABC, some 3-wave counter trend. That's what you're looking for. This market could move to the 96 and then have it across here. But what you need to do is you need to wait for that ABC correction, because otherwise you're chasing the top of the market, and you're just going to get burnt. What you see is not what you get. So you need to wait for a correction, then the next move. So that's what you need to do. But I mean, this move down through here, this A, B and C here for this one is something like you'd be looking for over here, but just in reverse here. So a little move higher through here, then some sort of, if it if it trades above the 72 and then trades back below the 72, that means it's testing to the downside, testing the demand on the strength of the market, and then you would use the 72 to build the trade onto that point and that point there. And I would, it's going to be a bit of a rough journey getting through this supply over here, sellers. But I'd certainly sort of hold on for that and look to add on to 96 and 96.10, 96.20 and 96.30 and leave it at that. And you need that 96.50, which is the previous high roughly. So it should be taken out, but you don't want to be adding up at that high. Always use group 1 to add in and leave it at that point. Alrighty, well, that's it. So, yeah, alrighty, well, good morning and good luck.